Welcome to today's deep dive into one of North America's financial giants, TD Bank, or Toronto-Dominion Bank. Whether you're a seasoned investor or just starting to explore this powerhouse, today's analysis will reveal why TD is a standout in a competitive banking sector and where it might be headed in the future. Let's start with the fundamentals. TD Bank isn't just another financial institution. It's the second largest bank in Canada by market cap and one of the top 10 banks in North America. With over 27 million customers, TD has built a reputation for reliability, customer focus, and innovation. But what really sets TD apart from its peers? One of TD's defining characteristics is its ability to leverage scale while maintaining a personalized customer experience. Unlike some of its competitors, TD has consistently invested in technology and staff training to improve customer satisfaction. Its branding as the Bank of Convenience isn't just a slogan, it's backed by tangible advantages, like extended branch hours and highly rated customer service, both in person and online. This focus on convenience has earned TD top marks in customer satisfaction surveys for years. Now, here's where it gets interesting: TD's diversification strategy. Unlike banks that rely heavily on one or two revenue streams, TD has built a balanced portfolio of operations. About 40% of its income comes from its growing US segment, 35% from Canadian retail banking, and the rest from wealth management, insurance, and capital markets. This diversification acts as a buffer against economic downturns in specific regions or sectors, giving TD an edge over less diversified competitors. Speaking of the US segment, TD's aggressive expansion in the US market has been nothing short of transformative. Its acquisition of First Horizon, a regional bank based in the southeastern United States, is expected to bring a significant boost to earnings. This isn't just about adding branches, it's about tapping into high-growth markets where TD can cross-sell its wealth management and insurance products to new customers. While many Canadian banks are eyeing the US, TD has been the most successful at integrating its operations and extracting value from acquisitions. Let's also talk about TD's ability to generate stable and growing income. One standout feature is its exceptional cost management. Despite heavy investments in technology and expansion, TD maintains one of the most efficient cost structures among North American banks. For example, its focus on digitizing back-office processes has significantly reduced overhead, freeing up resources for customer-facing innovations. This is something many of its competitors are struggling to emulate. But TD isn't just about playing defense, it's also about taking calculated risks that pay off. A prime example is its leadership in digital banking. TD has invested billions into its mobile and online platforms, which are now among the highest rated in the industry. The bank uses AI and data analytics to provide personalized financial advice, track spending habits, and offer tailored credit solutions. This digital-first approach not only attracts younger, tech-savvy customers but also lowers customer acquisition costs and increases retention rates. Now let's talk about TD's wealth management and insurance segments, two areas where the bank consistently outperforms. These aren't just side businesses, they're critical profit centers. TD is a market leader in Canada's mutual fund and ETF space, and its insurance division offers innovative products that are deeply integrated into its banking ecosystem. For instance, customers who bundle banking and insurance services often receive discounts or perks, creating a sticky relationship that competitors find hard to break. Another underappreciated strength is TD's focus on sustainability and corporate responsibility. While some banks treat ESG, environmental, social, and governance, as a buzzword, TD has made it a core part of its strategy. It was the first Canadian bank to launch a green bond and has pledged $100 billion in sustainable financing by 2030. These initiatives not only appeal to socially conscious investors but also position TD as a leader in financing the transition to a low-carbon economy. Let's shift gears and discuss the numbers because, after all, the stock price is what investors care about. TD's dividend yield of around 4.5% is not just attractive, it's reliable. The bank has a track record of consistent dividend growth, even during challenging economic periods. For income-focused investors, TD offers a combination of stability and growth that few competitors can match. But where is the stock headed? Based on current growth trajectories, I predict TD's stock could see a 5–10% upside in the next 12 months, driven by strong earnings from its US operations and ongoing cost efficiencies. Looking further ahead, over the next 3-5 years, the stock could deliver a total return of 25-30%, particularly if interest rates stabilize and its digital initiatives start contributing more significantly to the bottom line. Of course, there are risks. Rising interest rates, a slowing economy, and potential loan defaults are challenges that all banks face. But here's the key: TD's diversified income streams and conservative risk management give it a cushion to weather these storms better than many of its peers. Before we wrap up, let's not forget one critical point: TD's adaptability. The banking industry is changing rapidly, with fintech companies and neobanks challenging traditional players. TD has not only acknowledged this but embraced it. The bank has formed partnerships with fintech firms and continues to invest in cutting-edge technologies like blockchain and AI. This proactive approach ensures that TD remains relevant and competitive in the long term. So, what's the bottom line? TD Bank is more than just a solid dividend stock, it's a growth story in the making. With its balanced approach to risk and reward, focus on innovation, and strong operational performance, TD stands out as one of the best managed banks in North America. Whether you're an income investor, a growth investor, or somewhere in between, this is a stock worth serious consideration. Thanks for watching. If you found this analysis valuable, make sure to like, comment, and subscribe for more in-depth insights. Let me know your thoughts. Do you think TD Bank is a buy right now, or are you waiting for a better entry point? Share your opinions below. I'd love to hear from you.